Aloha and welcome to Java for the week of Sunday, January 28th, 2024. Thank you very kindly for joining me. We've got a very busy week coming up. Things are going to be very interesting. So let's get right into this. My apologies for being a little late getting this out, but there was so much to go over. So starting with the markets, as always, we've got a general in the United States economics, the numbers as we stand at this moment. So the market sentiment right now, we've got the bulls are clearly in control. We are starting loaded week. So let's look at what we've got as far as the calendar. Monday should be relatively quiet and just a bit of continuation. For Tuesday, we are getting home prices as well as job openings and consumer confidence. So jobs will be a highlight of this week. We'll go a little more into why. So Wednesday, more unemployment numbers. And the big one will be the FOMC meeting on the Fed rate interest rate decision. So Thursday, more employment and U.S. productivity with manufacturing. And then Friday, the big one will be the non-farm payrolls that will be coming in. So pretty much right now, they're saying that the soft landing that the Federal Reserve was after is fully achieved because the employment numbers are still looking good. And they've got a couple of mandates. One is employment and the other is price stability. So that with their inflation heading down, they have achieved their targets. So what does this mean going forward? We'll go into that in a little bit. So this week we are expecting earnings from 5 of 7 of the mega cap tech earners. And we'll go through which ones those are. We've got some SPY levels we'll be looking at this week, kind of for a range without something huge heading in here. So Tuesday, we are expecting earnings from Microsoft and Google. Wednesday, we're looking at earnings coming in from Boeing Airlines. And because of everything that has been going on lately, that would be one to watch. The big thing, as we were saying, is the FOMC meeting that we will be looking at. They're still talking about their 3 rate cuts. So inflation is continuing, although at a slower pace. Things are continuing higher. What does that mean? Prices rising include prices for the stock market will continue to rise. That means as well the dollar will weaken. So we always watch those in with it. So we're watching the 10-year yield as well as the relative strength of the dollar. Now, those are both hitting resistance levels. So as I was saying, the market is set for a pullback at a resistance level. Pardon me, the dollar and the 10-year yield are at support levels. So if those start to rise, they will put pressure on the stock market this coming week. So we'll keep that up to date daily. So right now, really what they're watching more from the Federal Reserve is their pace on quantitative tightening, their tapering, and then also the supply and demand on treasuries. So treasury funding could cause an issue here because if they get large supply of treasuries from Janet Yellen, that could dump the rate on the 10-year yield. So if that rate pulls back and the 10-year yield comes down, that's very positive for the stock market. However, if they decide to kind of tighten that up and issue less treasuries for the debt coming forward, which I personally don't see them doing that, it would have the reverse effect. So, in effect, through this, Janet Yellen could be taking control of the effects of the market from the Federal Reserve to a point. So, we'll be watching this Wednesday. Thursday, we've got the Bank of England will be making their decisions on rates moving forward. We've also got earnings coming in from Apple and Amazon. And then on Friday, we are getting the larger employment labor data, and we're also getting earnings from Meta, which is formerly Facebook, parent company. And we've also got earnings coming in from ExxonMobil and Chevron, which we'll be watching because of oil. So we've got oil more in the stories because of also the larger economic global picture and war going on. So with the economy, we'll be watching also political influence moving forward. This is I like to call it selection cycle. This November, we are choosing new president for the United States. So it looks like large possibility for former President Trump is running to take control again. If he does, that's very positive for stock markets. And we're looking forward to his opposition will likely be in the form of either Hillary Clinton or possibly Obama. So we'll be watching that. So we've got a battle going on in the United States of the political elite versus the corporate elite. And this is kind of like a China versus the United States. So China controls theirs through the PBOC, the People's Bank of China, and they are all issued rules through their government. And in the United States, it's kind of the opposite. The government is ruled by the corporations through their lobbying and the funding. So it's kind of a little bit divergent there. So we have the Chinese market right now is very weak. So they have strongly discouraged short selling through the government, Chinese regulators curbing short selling as they had their market downturn. So they're also talking about kind of a quantitative easing that would lift the Chinese market. So with this, I just want to bring this up quickly. We had Asia Genesis. This is a huge hedge fund based over in Singapore, but basically they were betting on between China and Japan. And I just want to bring this up because they have a tremendous amount of talent, and these are very brilliant individuals. However, they're going off of classical formats that price earnings ratio and with corporations, and kind of lost a little bit of the overall global macro. And so they lost over 18% in their fund, decided to close it down. So just wanted to bring this up because even the most brilliant people in the trading business get it wrong from time to time. And in this case, they got it wrong in a huge fashion and basically kind of blew up the company. So they will be shutting. So moving on to our macro, we've got the French protests going on. So now their prime minister over there did promise to address what French farmers are talking about, unfair competition. And it's what they're doing with their import prices. They're basically choking out French farmers so they're not able to make any kind of profit or even survive. So they have said that they are going to continue the protests despite these concessions. Now, their protests have taken the form of large scale, basically, they're tearing up some of the roads into Paris, dumping manure in large places in front of their government buildings, having tractors drive in and cut off road access. So it's escalating quite a bit. So now their government is finally starting to listen. So moving overseas to the United Nations Conference on Trade and Development, they're now raising the alarm over the disruption in global trade due to this Red Sea shipping crisis because of the Houthis, talking about will particularly hurt developing nations and impacting global food prices. So not just cargo, we're talking about shipping with clothing and other things, fuel, freight rates, but now they're talking about the impact to food. So this is also hitting India's global trade. So this is from the other sides. They're talking about Ansarullah, that's the Houthis, talking about their undeterred by American aggressions, what happened. And we have two different stories. So from the U.S. Central Command, they're saying an anti-ship ballistic missile fired came close to the USS Carney warship, but that it was shot down. They are saying that it was a direct hit. So this warship was basically escorting in two merchant vessels. The two merchant vessels, basically, after this scuttle, if you will, chose to leave. So they never went into port. So the Houthis are saying that they were trying to go into an Israeli port. So both of them say that it was targeted. They're saying they hit the U.S. warship, and the U.S. is saying, of course, that it was shot down. So we don't know which side actually is the truth. That's kind of what happens with the propaganda that is coming out, depending which side you get. So coincidentally, since they can't win this way, we have UNRWA. So this is the United Nations Relief and Works Agency. So basically, Palestinian refugees, uh, it's UN funded from multiple countries supporting the relief and humanitarian aid, basically, to the area. So they're cutting funds. They said they have found basically that several of the people at the top of this were directly involved with the October 7th attacks that had happened. So, with that, several countries suspending funding, including Australia, Canada, Finland, Germany, Italy, Netherlands, Switzerland, UK, and US. So, why is this significant? So this aid basically is going to feed all of basically they're talking about the war victims, but propaganda-wise, generally, money that is funded towards these type of quote-unquote humanitarian aid, more than 90% of it never makes it to the target, gets pocketed along the way. But this is a way for them to hit them monetarily. When you look at these countries that are doing the funding, so of course, the largest ones, United States and Germany. And both of them, United States and Germany, have cut their funding, as well as larger portions of the European Union. So, with the back of this, this is just another point of control, and they've got a lot of disruption going on with this. So, another target that was hit by the Houthis was British oil merchant vessel Marlin Luanda. So that vessel was set on fire. So they've decided to hit back by monetarily defunding this, basically the humanitarian aid. So we'll see how that goes. We've also got news about Israel looking at expanding this to Lebanon. So as they're expanding these wars, this is all inflationary for the longer term. So while we're looking at bullishness in the markets, it's not good for the economy. We know there is a divergence. So we're watching it prices rise. So the argument about the US economy that real wages are rising, we're watching more bankruptcies, more people having issues paying for their bills, finding food. We've got the Texas crisis going on at the border. They're sending down a trucking convoy for a protest. So we've got all of these issues going on. How's this going to affect us? Well, coming into this week ahead, we've got a bullish market, and it will continue to be bullish for the longer term. If nothing else, not price to earnings, because none of that applies any longer, but simply because of inflation. Now, I am expecting a pullback. We will have these pullbacks in the market, and in the longer term, this is unsustainable. So expect that at some time, the footing will come out from underneath of it. It's possible there could be large disruptions on Wednesday as the Federal Reserve speaks, but for the moment, we'll have to update you on that. But the larger picture is that that will continue for now until everything drops out. So there is a saying, first it happens slowly, then all at once. So be cautious in this, urging caution with this forward. Always keep your stops underneath you if you're trading in the market. And last, I just want to bring this up because in the light of all of these things going on, I want to make sure that you understand that this is a lot of opportunity going on, and that also by staying prepared, you can do very well with this. We will be fine. But just got this cute one. It's a video completely off, nothing to do with the economy. But if you got a short minute and you've lost your AirPods, got a spot you might want to look, I'm going to leave this link down in the description so you can watch this after this video. So with this, if there is anything in here you do like, I would appreciate that. And with that, thank you all for staying here with me. And until I see you again, my friends, stay free.